Good morning and welcome to Master Trader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capper. Today we're going to review the broader markets. I'm going to show you a pattern that I'm looking for it to play out over this coming week. All right, so the futures here are a little bit lower here this morning. They're backing off from this little rounding type of a top. As you can see them here on the 15-minute chart, they're sitting right on support. This little first shelf of support, which is Friday's low. Friday's low was an inside day, and the prior day was a bottoming tail bar. Now, in the past, the bottoming tail bars have followed through to the upside, and the question is, will this one? What do we want to look for here is a pattern in the past that is likely to reoccur or could reoccur. So here's a bit of a rounding top here and a little cup type of a pattern. And that's where I'm looking for prices to develop over the next few days, is that this little rounding top here, if we're going to follow through to the upside, it'll form a nice little cup here over the next couple of days, and then it'll resolve itself to the upside. Now, of course, this low area is going to become significant for buyers to step up and defend. Otherwise, it's going to break, the up by pushing through this major support level. So you want to keep an eye on this level. You want to see over the next few days that prices can hold here and start to form that little cup as explained. And if it does, then we look for higher prices. Unless you're an intraday trader, as far as the S&Ps go, it's probably best to stay away. And meaning if you're a swing trader, you have to wait for things to develop on this daily time frame and then go long from there. Now, if you're not using the futures, of course you use the spiders, and you got a bit of a different pattern since this does not take into consideration the 24-hour chart. And you can see the bottoming tail bar and the inside day. And it's the same type of situation. We're a little bit of a rounding top. We look for a little cup to form, and then ideally it's going to resolve itself on the upside. You've got a similar pattern here, and then it reverses up. And we may get another bottoming tail bar. We really don't know how it's going to form, but look for the candles to form in some type of bullish alignment, and then we'd go long. And if it breaks below here, well, that changes the whole picture of it, and we look for a move down to this level. Same thing on the NASDAQ. Down here, near a little support there. The inside day from Friday, the prior low is down below in this area. So one of the things you want to understand and learn is that the majority of those that use charts draw lines like this, and they're meaningless. Okay, you do not connect dots on a chart. I know most do, but you don't connect dots on charts and project lines into the future and find magic areas of support and resistance. All you need to do is look to the left and see where the congestion is and swing lows, or if things are in a downtrend, swing highs. Right? Trends typically continue in the direction of the trend. So the assumption is that prices hold areas of support where buyers stepped up in the past and held those levels and pushed them higher. So forget drawing lines diagonally, look horizontally, and a lot of the mystery of the markets will start to open up themselves to you by getting rid of the subjective indicators. Good luck in this week's trading, and we'll update you tomorrow.